I like how you said it, but
I like how she explains it because I see it.
yeah, but so my
And
So
question
Jamie,
I'll
is,
try to explain it again. So it has to form itself into an order block first. Okay, so we understand that the first one was an order block when that second green candle broke the top of that red candle to the left. Then the second one became an order block when that long green candle broke its top. Okay, now that it broke its top, now it's a propulsion block. It's an order block, but it's a propulsion block because it overlaps with the area of the first order block. See how it comes down when he says enter into? That means there's a space where those two overlap. So now we can look for a retracement back into it because then that's when the propulsion happens. Once you retrace back into it, it's like
okay,
now the gun is loaded and it's going to shoot off.
so my question is, are we marking the top of the wick of that second black candle we're discussing? And that is our zone of entry, or do we wait until it goes a little bit deeper?
I
Like
would
at
say
what point would you pull the trigger? Would you wait for it to go a little into it, or as soon as it hit the top of that candle, hop in because you're ready to go?
hop in because you're ready to go. Because what if it doesn't make it to 50%? Because it's so strong. But it looks like it does at least go to 50% on this one. But I guess what he's saying, it shouldn't go over and the mean, what they call the mean threshold. So it shouldn't go, I guess, beyond that order block.
I think he said it shouldn't close below. Can I replay it back real quick?
Mhm.
Okay.
This one here on the tail. We mark it higher there. And then we have this down close candle, which is right above and digging into this down close candle. This is an order block. It's push. This is a propulsion block. Propulsion blocks are order blocks by themselves, but the way to differentiate what they are and how they're used is this down close candle digs into a previous down close candle. So an order block that has another order block that digs into it. Propulsion blocks, you never want to see a closing price.
So what I want to say is that while this candle dug into this candle, it was not an order block until this candle formed. Right? So
Right, that's what I see.
Correct. That's what
okay.
we all agree with
I
that.
think, yeah, I think we all align with that one. Mhm.
Okay,
yeah, we agree.
so now I'm gonna play it and we're gonna see what he says about it. I think he says it should be respected. The 50% should not close below and it should be respected.
Below mean threshold. Mean threshold on an order block. See, it has another order block that digs into it. Propulsion blocks, you never want to see a closing price below mean threshold. Mean threshold on an order block is the 50% level. We wicked down through, but then closed here. This one here, we wicked down through it and closed right here. We wicked down through it and closed up here. So yes, we had the movement through the mean threshold, but we didn't close below it. So that still keeps this down closed candle valid as a propulsion block. I promise you we're going somewhere. Friday, Thursday, what?
Okay.
So way I take what I just heard is that I'm going to go back and say, okay, I see a formation that I recognize. I see a chair formation. I'm going to either put a fib on it or something to mark 50% based on a formation I know and use it as a guide to enter a trade, knowing that as long as it doesn't, as he say, validate the whole order block by price dropping below that area, somewhere in there is my zone, either 50% or whatever that comes up to be with a fib.
This is a good point that you bring up because if we incorporate the understanding that we have of ICT and we're doing our charting and we're like, okay, I know that's an order block there. Okay, well, let me chart my buy zone, leg in, base, leg out. We know that this is a propulsion block right here, so this would be a high probability chair, if you will. Like,
That's
we know,
what I'm talking about.
yeah.
Excuse me, I'm getting excited, but this is what I'm trying to get.
Hey,
You
I
just
love your
connected it
excitement.
together.
That's what I'm talking about. Shoot, yeah.
Yeah,
It's
Jamie, you just connected that with the IWT and everything. I love it.
This is what I want. I'm not trying to cancel anything out. I'm trying to build on this bad boy. Excuse me.
yeah. Heck yeah. Heck yeah. Yes. So like if we're looking at charts and I'm like, does anybody have any questions? Anybody see anything else? If like Tina is the propulsion block killer, you know what I mean? She's like, isn't that a propulsion block? So I think what I'll do is instead of, saying this is a propulsion block, I'll just let it be an order block. If we start to notice as we look at these charts that it reacts as a propulsion block, then we can consider it like, oh, you remember when snow where it was like, 2 weeks apart, but it still reacted like a propulsion block. Then maybe we can incorporate that into our analysis. But for right now, I'll just say that that's a an order block instead of a propulsion block.
Yep.
Okay, that was good. Anybody got anything else that they want to say about propulsion block?
So the mean threshold is what?
50%.
Of,
Then an order block.
okay.
So he'll
So
talk.
if you had put a fib on there, those lines broke through the 50%?
Yes.
Okay. And that's what we want.
Well, it's not that you want it, but you know that it won't. If price closed below 50%, then your propulsion block is invalidated. Like you don't want to see that.
Okay, you don't want to see that.
Yeah.
Okay.
So say we came in and we were charting and we were charting on you say this is a Friday candle and we were like doing our charting and we were like, oh my God, is that a propulsion block? Is that a chair? Yeah. And then we could be like, okay, well, if price opens up and let's say it pushes down in here again, then you could take the trade because none of these candles right here close below 50%. So you still have an opportunity on this day to take the trade. So I would say, Patty was asking like, okay, well, when do you get into trade? How do you use this? Like, you can wait for a dip down into 50% and get in here. And then you just have to know that you're going to, probably be in drawdown here a little bit. But then eventually the block did what we wanted to do.
Okay. Got it.
Excellent.
So any of those wick candles you can enter. Not any, but the best one is the last one, but before it takes off. But if you go ahead.
I'm interrupting you. Go ahead.
Now I was saying those 3 candles that dipped into the 50 to the mean threshold.
Yep.
I was saying like someone might start seeing the black candle forming and the next little hammer, I call it, the upward hammer forming. And you're like, well, should I get in? Should I get in? Should I get in? And even like you said, even if you get in on the second or third one, the fourth one is when it takes off. And that's the best one not to suffer a lot of drawdown. But even if you're in on the third one, you're in and you just go ahead and take a little drawdown because it's going to go up anyhow.
Yeah, I don't think that any of these candles are better than the other to get in on in this example. It's just if you know that this is a propulsion block and you incorporate it into your analysis and you have your stop down here below the propulsion block, you just wait. And I would say that, there's a high probability that this propulsion block would hold up because it left this liquidity intact up here. Like we might see instances where a high gets run up here and then there's a propulsion block and maybe it'll fall because it reached terminus if this was the objective for the price to go to. So we would just have to watch that when we're looking at the charts. Yeah, so any of these candles would be good to get on.
Okay.
Yeah.
Wonderful.
Yep. And then notice that, so when we talk about order blocks and we talk about 50%, he calls that the mean threshold. When we talk about fair value gaps and wicks, I think he includes wicks, we talk about consequent encroachment. So look how you got this wick right here and price came down to just below 50% of it right here. And then it took off. So if price was pushing down and you were like, where do I want to get in at? It looks like it met 50% right here of the order block and of this wick. So it's like, man, I'm pulling the trigger. You know? And we can presume that we're going up because we had this daily fair value gap here. We already know when price fills a fair value gap, we can anticipate a reversal. And all this was a swing high, swing low, came into a discount. So that's another thing you can do. Like if you put a fib on from here to here, down here is about 50%, just eyeballing it. So if you only want to enter when it goes into a discount, that's where you could look at getting in as opposed to up here. Does that make sense?
Yes.
Yeah, that's good. All right, I'm stopping the recording. Thank you very much. So this will be posted so you guys can watch it. Make sure you want to stop.